Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't, and just remember the disclaimers below. Nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. If you are going to invest, consult a financial advisor or a professional and do your own research. So, anyway, I haven't been able to because of time constraints and everything else. And not only that, having a family now, I haven't been able to do the videos as much as I'd like. That's why the format's changed a little bit. I used to go over the economic data, but yeah, if you look at this, first thing I want to get into is I've been looking at GDP now, and before this, the latest estimate was 3.5%. Now it's come down to 2.9%. I think until the Q2 GDP, look at this, down from 3.4% on June 18th. I think it's going to continue lower. We're starting to see the economy really tank. They can't hide it. Right now, the market's so hyper focused on tariffs that stocks they're going well. I mean, I don't think this will continue, meaning over the next couple of years. I said in one video when I saw Buffett was going to stay on for the rest of the year, I figured some shenanigans like this would happen. But very interesting. Q2, right there, you see the GDP now estimate. At one point, it was at 4.5%. Looking at this, and now it's at 2.9, and I think it's going to go lower. I think at the end of the year, starting 2026, I think economic reality is going to hit. Like there, I could be wrong. It's like the housing market. They're not even denying that. Do you remember a year or two ago when they said there was low inventory? There's just low inventory, and all we need is lower rates and then sellers. There's plenty of buyers, and now they're saying the opposite. So I think next year reality is gonna. I think how bad things are, it's gonna hit, but uh, not this year, but probably next year. I mean, I know it sounds like, but this is just where we are, and we're seeing. Look at the Atlanta Fed GDP. They for Q2 at one point they thought it was almost 4.5, closer to 5 than 4, and now it's at 2.9. And what stood out to me is I think the data is important because it eventually it eventually reverts to the mean. No matter how much they fake it, eventually the truth comes out. Look at core PCE, that's 2% above the consensus. They can't deny inflation is here. Uh, Personal incomes, this really stood out to me. It's in the negative. I'm not talking about real terms. I hate that term when they say real terms. When investing, real terms do not matter. Nominally, month over month, personal incomes are down 4%. People are losing their jobs, and they're not getting good ones. Personal spending down 1%. I think that will continue. I'm not saying there won't be positive months. Remember, markets are nonlinear and fractal in nation, but price is up 1%. PCE index 2.3% year over year. Core price. So this was the Michigan consumer sentiment. I have an article up here how I do them. But you can see the data is not looking good. That was Friday's. Uh Pending home sales 1.8%. And this is the strongest move. It was supposed to be down 3%, but this is still not good. But I used to work for a moving company, did accounting. This is the strongest month of the moving season. It should be at 5, 6, 7. This is not good. They generally don't buy during the winter for whatever reason. So anyway, pending home sales, even though that was still GDP final, that's quarter over quarter, but where's the GDP actually? GDP growth rate, there it is. 0.5% down. worse from negative point 0.2. Everyone thought it was just the tariffs. They revised it because there was bad data. Look at the Chicago Fed national activity. That's negative again, 0.28. And look at this. This is what I said. American companies, they're not well run. They're poorly run. They've made a lot of mistakes since 2020. They handled the pandemic poorly. Uh, they're, I know because I live around them and whatnot. They don't know what's going on. And corporate profits, that's down 3.3%. So you can see that corporate profits are down. Trade balances continue to skyrocket. So their wholesale inventories, that's down 3%. Why take inventory when you know you're not going to have buyers? So uh, a lot of these companies tried to grow. They bought in the AI hype. What they should have been doing was paying down debt. That's what they shouldn't have done. They shouldn't have been trying to grow, hold on to their core consumer, their core customer, and pay down debt because we're in a long-term trend of higher, longer-term interest rates. They study everything from the micro level of their business, but they don't understand the macro. They read the news, they're a bunch of sheep, and that's why you're seeing a lot of bankruptcies. Bankruptcies are going through. And if they needed to hire people, they should have been doing it when no one was hiring them. When during 2020, when no one was hiring. Uh, as some say, either you're a contrarian or you're a victim. And anyway, going back, new home sales that declined 13.7%. We're going to expect housing prices. I mean, the market's looking horrible, and what I think is going to happen is when they cut rates and they cut rates big time, I think everyone's gonna be like, all right, great. Now they can buy because of lower interest. I think inventory is going to explode, and because people don't have the incomes, student loans, their credit scores are tanking. There's going to be no buyers, and the prices are going to fall through the roof. And that's what I think. Building permits down negative 2%. Well, these new home builders, they can't get these houses sold, so why would they build more? Uh, Building permits. So this is all. And I don't even think with rate cuts that the rates are going to go down that more because it's risk. But when you have people up to their loans, and I've covered this, the auto loans, they've already defaulted on their defaults already happening. If you've been listening to this channel, I've covered it. Well, how are they going to get mortgage loans? They can't even pay off their auto loans. So we're going to see that. Credit card loans up to wazoo. You're seeing, I've covered it. Bankruptcies are coming there. So I've covered this. So if you haven't seen it, you should subscribe. Richmond Manufacturing Index, negative 7%. One of the promises bringing manufacturing back. Here's the thing. For now, I hate to be a gloom and doomer or whatnot, but the truth is, like, one of the reasons I don't listen to a lot of these channels is because they talk about Constitution or whatnot. And the truth is, like, America's not coming back. Like, what it was is in the past. It's not coming back. I don't know exactly what new will come. I think America's going to break apart. Personally, I'm not in any political movement or anything. I am an analyst. I'm a cycles analyst. I just absorb what is presented to me. So look at this house price index month over month, negative 4%, which is very unusual, worse than the forecast and worse than consensus. Now it is up over year, but it is down on a month over month basis. Now the S&P Case-Shiller, that's up year, 3.4%. That's and month over month, 8%, but the home price is going down. So existing home sales was up 0.8%. That's better, but yeah, if you look at this data is getting worse. It's not getting better. Stock market's going up, but for how long? And that's the question. It's not a matter of if, but when will it start going downward? So other things, consumer confidence. I was reading this 24th, retreated in June after increasing the previous month. Now, as I said, it's tariffs are not to blame, but they say various tariff delays or whatnot. Truth is, people have no money. They're broke and prices are way too expensive. Prices have to come down. And that's the thing. If you want any type of economic activity again, and that means asset prices too. It doesn't just mean prices like when you go to the grocery store, home prices, the big ticket items, home prices. That means one of the reasons we can't bring manufacturing is they juice up asset prices, which are land values, which are home values, and it makes it too expensive with the property taxes, the insurance, all that other stuff. It makes it more expensive. So it is a bad home prices. I mean, falling home prices will be good for everything, and it'll help bring manufacturing back. It's not coming back, in my opinion, anytime soon. Probably maybe in the 50s or 60s it might come back. But and we'll see what happens. Who knows? So tariffs remain, yeah, whatever. Here it is: inflation and high prices. We're concerned, yeah. And inflation's not going away. So when consumers have low sentiment, they're not going to be spending. They're not going to be going on vacations. They're not going to be. So there it is. And then look at this. Consumers are feeling the pressure of a stagnant labor market. The economy's horrible. I think it's worse than '08. If you're in some areas, all I see is college graduates cannot get in this get jobs. They can't get entry level jobs. So I don't see this getting better anytime soon. Vibe session of 2022. I don't buy it, but yeah, we're seeing. Look at this. Weekly filings for unemployment are at an 8-month high. Workers are taking longer to find jobs. Continuing unemployment claims are near highest level since 2021. Hiring rate lowest in more than a decade. Tech workers and new college graduates, it's worse than the pandemic. This says before, but so yeah, we're seeing a lot of yeah. Do you think these people are buying homes? You think they're going to commit to a 30-year mortgage when they don't even know if they're going to have a job in 30 months? Yeah. Good luck finding a buyer when all this inventory comes out. So here it is. And speaking of it, too many sellers, fewer buyers. Experts predict housing prices to fall. Now, I don't know who this expert is, but this is one of those shifting in the favor of buyers. 33.7% more sellers. The imbalance is the largest since 2013. 1% decline in home prices by year end. So sentiment's really bad. Market slows, rates hold. Comerica Bank, Scheller falling. Well, that's not the most recent. So, but yeah, as you can see right here, sellers are overwhelming the buyers. I think that will continue until the price crashes. But yeah, that's a new. Look at this. Fed preferred inflation gouge shows price accelerated in May, way above. So, I mean, we went over the data. It is way over the 2%. And this is the other thing I wanted to get at. Home purchases are falling through as buyers get cold feet. Yeah. Well, when you're facing layoffs, you're not getting any raises, there's no promotions. Look at this. 59,000 home purchase agreements were canceled in May, equaling 14% of homes that went under contract. That highest percentage dating back to 2017, and it's up 14% since last year. And look, Florida and Texas seen their housing markets slow considerably. Highest rates of cancellations among the majors. San Antonio, followed by Orlando and Jacksonville. So you can see medium sale price, it's still up, but it's coming down. You're starting to see the stuff I've been talking about the last 2 years finally hit the market. And pending sales rose most in the Midwest. I mean, I'd say when you get into the 2030s, the Midwest is probably where you want to be, because America is going to be drastically different, in my opinion. I think parts of America are going to be siphoned off. I don't want to say too much. They could be siphoned off to other countries or territories. Uh, I mean, in terms of food safety, shelter, like the prepper stuff, I think in terms of self-sufficiency, I mean, there's not really ports there. So there's no perfect land area, in my opinion, based on political and everything else. But based on my data, I'm not going to say what it is, but I think the Midwest will be the safest. And yeah, look at the home sales are still there. So relatively pending sales fell most in Florida. So you look at this. Florida to me is a leading indicator, not a lagging. Some are a lagging, not us. And here's more. Hyatt lays off 30% of his guest service and support teams. So that's a lot of people. They're getting laid off. And I talked about this. 12 billion from Canada is no longer touring, spending their tourist money in America. So yeah, these companies that would like Hyatt that would serve them through apartments, they're not going to need the workers. That will do a domino effect. Those workers are going to have a hard time paying bills. They're not going to go out. First thing they're going to cut is leisure and a lot of other stuff. So, and a lot of people say housing market's bifurcated or whatever. It's not true. Because the truth is, look at this. Urban Marylanders are migrating to more affordable, smaller metro areas. Yes, maybe the richest of the rich stay, but there's a lot of people in very rich areas that are struggling. And so, look at this. I'm from the DC area. Urban Marylanders migrating to more affordable, smaller metro areas. The people who spend their money in their area that are in the middle of that, let's just say like Montgomery County, PG, which is supposed to be more affluent. Trying to think of another, Anne Arundel, like they're gonna move out. They're gonna Frederick County, yeah, there it is, Frederick County. They're gonna move out. They're gonna move somewhere else, and then all of a sudden there's less people owning homes there. Those homes start to go down. And look at this. Yes, there's a trend. More people are leaving Northern Virginia and moving into particular areas with lower cost of living. So what happens when those people move out, where it's condos, homes, townhouses, they're going to move out. And that brings a lot more inventory, a lot more sales. No market's safe. I mean, don't get me wrong. I think the higher end are the last to go in terms of price crashes, but it will come there. It will get there. No one was safe from '08. A lot of people say in DC, but that's because DC. It was the housing market was so small. I mean, so lasted so it wasn't that long that people forget. I remember that because I know people who lost money, bought homes in '06. They left DC in 2010 or 12, and they lost money. So I know it did happen. So anyway, in terms of gold, I mean, I'm a gold bull. I'm a gold bug. Well, I wouldn't say I'm a gold bug because I think the next upswing will be parabolic, but I don't. I think it will go back. This is how bull markets work. Let's say I'll just give the technicians their credit. 2015 it started. It went up a little. Then it based all the way to 2019, shaking out everyone on the way up, shaking. And then 2019, it goes up drastically. And then if you look at it, it peaked in 2021. There was that gold price, but I don't count it because most people do gold equities. But from 2021 all the way till 2024, it had a very long correction. People were throwing out. I remember one interview. It was with Jordan Royber and Rick Rule, and Rick Rule talked about patience, and Jordan was like, "Well, how much more patience do they need?" And Rick Rule got really angry. I mean, I've never seen him angry on interviews. I mean, I know both of them. I mean, well, I haven't seen or talked to Rick Rule since I would say almost 10 years. Honestly, if he saw me, he wouldn't know who I was. Well, old podcasts I used to interview him, but he is the nicest guy. I mean, sometimes on interviews he comes across as very cocky, but he is the nice, especially for someone who's done as well as he has. He is actually. So I mean, Rick Rule is actually a very nice guy. So is Jordan. But I remember how bad sentiment was, and that was a vicious bear market. And then it came back, and then it went from 2,000 to 3,500. And they're starting to get, Barron's had it in gold, so it's a natural. I think it's going to go down 2,900 to 3,000, somewhere between there. I bought a little bit just for disclosure of gold equities. Not much, not even material to my portfolio, but I bought some because it's just down 50. I sort of had to, in my opinion. But I think the next wave, and then I think it'll be a multi-year bear market. And I do think the next bull market will be like 1,500 to like 8,000 or 9,000. I think there'll be a 20-year bull market, but it will begin with a sort of bear market. So if that makes sense, I think yeah, the stock market it's going up. I mean, I think we're coming to an end, and it'll be like a 20-year bear market. It will begin again. So anyway, like what probably will happen is these tax cuts will get passed, and it will be a blow off top. Uh, so anyway, that's all. Hit that like button, subscribe. Remember the disclaimer. No, this isn't financial investment advice, just my opinions, thoughts, and I'll see you next video.